Hi, everyone. I hope you're doing well. I have a guest who's no stranger to the show, Alex Mashinsky, who is the founder and CEO of Celsius Network. Alex, great to be chatting with you today.
Thanks for having me again.
Alex, very uncharted waters we are in across the board with all markets. And I would love to get your perspective because you've seen a lot of different things and invested in a lot of different companies and so forth. What are your thoughts on what's happening right now in the current economic climate?
Well, we're going through a period of fear. If you think about it, it's like basically like a hurricane that is sweeping the entire planet, and it obviously started in China, and now it's in Europe and here. But unlike a hurricane that just comes and leaves, and then we just get to deal with the destruction, and we can rebuild quickly, and so on. Here, this is something that's going to stay with us for a while. I think it's going to change how we behave, what we do, and the coronavirus is just not going away. Sooner or later, all of us are going to be infected. Most of us obviously are going to survive, but it's not something that we should take lightly, and that's why you're seeing the financial markets and other markets going through this fear period. And during fear, everybody sells everything they have and they go into the safe asset, which right now is US dollar.
Got it, and that makes sense. And I think the stock market itself was at a point of a massive bubble, and then it seems this virus situation was the pin that really popped the bubble. And to your point, is fear across the board. So, on that note, Bitcoin has been known as a safe haven, as one of the safety assets, but it seems to be moving in the same direction as the stock market for the most part. Can you talk about the correlation there that you're seeing?
Yeah, so in theory, gold and Bitcoin should be moving in the opposite direction to the stock market. Like you said, I've been tweeting about that since January, kind of saying with a picture of the bubble and the pin, telling people, hey, like the Fed is injecting hundreds of billions of dollars into the repo market. Earthquake is on its way. Watch out, watch out. But the non-correlated asset, the Bitcoin, the gold, did not behave the way it was supposed to, right? Because this was such a massive period of fear, and because there were so many margin calls in a variety of other assets, people had to liquidate everything they had. And Bitcoin Gold has pretty good liquidity, so it's very easy to sell. It's actually easier to sell Bitcoin than it is, for example, to sell Uber, because there's not that much liquidity there right now. So because of all these things, people went to the asset they can sell quickly, and you saw these assets plummet. Those caused additional liquidations, and that's why you saw over $1 billion worth of BitMEX liquidations of Bitcoin. Same thing in gold. There were liquidations in gold, and so the currently Bitcoin and gold are behaving in a correlated asset. They do exactly what the stock market does. When we are done with the liquidations, when we're done with the need of people to get cash on their balance sheet, cover margin calls, all the speculators basically getting out of the game, then we will be left with the bedrock. And the bedrock are the hodlers, for example, people who are with Celsius Network, who are not selling at all. We don't see any of our users withdrawing or selling. They're just sitting on their hands. So we will see decoupling or separation of this correlation. So we will see stocks stabilize or continue to go down, but at the same time, we're going to see gold and Bitcoin going up. Today, gold is up 10%, or less than 10%, but it's up dramatically.
Mm-hmm.
And we're starting to see, we should be able to see Bitcoin kind of attach itself to gold instead of attaching itself to the stock market.
Yeah, I'm in agreement there with you because I believe there's a lot of institutional investors now in crypto, and to your point, they're liquidating to make up for some of the losses they're seeing in other markets. Well, that's something I've been talking about, and certainly makes sense. So, what's going on at Celsius Network? How are you guys navigating this period of uncertainty and fear, and what are some options folks have via Celsius Network to maybe earn and as well as have some safety, if I can frame it in that way?
So we provide two products basically. One is the ability to earn interest on your assets, and you can earn interest on stable coins, which is like US dollar, Canadian dollar, British pound, and so on, or crypto assets like Bitcoin, Ethereum, and so on. We have 25 assets in total. And right now, especially if you're sitting in dollars after selling all these assets, your dollars are not earning anything. The opposite. The Fed it just printed, several $1 trillion worth of new, fresh money that they're gonna use to basically calm the markets and put liquidity into the market. So you're gonna get diluted, right, even more. So it's a great time to put your dollars to work. We pay between 7 and 9% on stable coins, and because of that, it's much easier for you to earn yield on those dollars while you're waiting to decide, I'm going back into the gold market or I'm going back into the stock market. But first, I think the storm has to pass. We have to see how bad it's going to hit us. And because we may not go to just a short recession, we may go to a depression. And because of that, the recovery is not going to be a V recovery or U recovery. It might be an L recovery where the stock market goes down 50% and then it just stays at that level, because all the companies' earnings are going down and so on. So we have to first understand what that is, what's happening, before we can redeploy our assets. We meaning the citizens of this country, right? So Celsius also provides loans. You can borrow dollars against your crypto, so you don't have to sell it. And so you can basically just download our app, deposit some of your Bitcoin, for example, and borrow dollars against it. It's instant. You get approved pretty quickly. And the third thing we do is we lend these assets to institutions, and that's how we earn interest. And every week we publish the rate that we earn, and we give 80% of that back to the depositor. We invented this crazy idea that the guy with the asset, the owner, should make 80% of the profits, right? So we think that is the way, that is what decentralization should look like. That's what Bitcoin holders should get. And right now, I think you're earning something like 4% on your Bitcoin. So it's a great time to get Bitcoin on your Bitcoin, right? Especially at low prices. You want to hodl now. You want to earn as much as you can before the halvening, before these things go to new all-time highs.
Right. And on the stable coins part of things, so like myself, here in New Jersey, Hoboken, New Jersey, in the U.S., so if I was to, put my dollars into the respective stablecoin, which one should I put it into? Let's say I don't know anything about it.
So we have 12 different stablecoin, anything from what's called an SDR, which is a World Bank currency. It's a basket of 10 different currencies, and it's created by a company called Saga. Or you can have a dollar-based stablecoin, like the one that the Coinbase, for example, make, called the USDC, or Tether, which is USDT. We support all of those, and they all basically earn the same. There's no difference between them on the earning side. It's more about do you want to be attached to the Australian dollar, the Canadian dollar, the US dollar, or a basket of currencies. So almost all the issuers are trust companies. So I don't think there's a difference between Gemini and Coinbase and Tether, for example. But you have to make your own choices. We don't recommend one or another. We just support 11 different ones, and it's up to you to decide. We don't sell them either. You have to go to the companies that issue them to buy them. After you have them, you can deposit them in the wallet, earn the interest. So if you, for example, let's say the interest rate is 10%, and you held it with me for a year, and you had 100 Tether, you will have 110 Tether, but then you have to redeem that for $110, either with Tether itself or USDC. You will redeem that with Coinbase, and so on. So we just help you earn the interest. We earn the yield, but you have to buy these things with the issuer.
Got it. That makes sense. That's very helpful. So it sounds like you have the option of the different stable coins, and you can choose which one you would like to go with. But for the most part, you can earn pretty much around the same interest for all of them.
Yes, the interest is about the same. Now, Bitcoin, Ethereum earns a different interest, right? Mm-hmm. We change the interest up and down. If there's more demand or we're earning more, then we raise the rate. So, for example, we raised the rate on Bitcoin for the last 3 or 4 weeks because there's more demand, and we just give 80% of it back to the community. So, but some rates, some coins, the rates are going down. And I can tell you again, we're probably the only company out there that actually earns that yield. Most other companies that publish yield, they subsidize it. They just try to get you to become a customer so they can give you a credit card or sell you something else. We're not trying to sell anything, right? We're just earning yield, and we're giving 80% of it to the community. So we have different, Celsius is a community organization. We're basically doing everything in the best interest of our users. And that's how we were created from day one, 2017. And we kind of invented this category. And, I think we're doing it better than anyone else. Continue to pay more. We paid more in Bitcoin, more in Ethereum than all the other guys put together.
That's awesome. And I'm curious, as the Fed continues to print more money, and it seems like massive bailouts and trillions up every day, it seems like. Do you see any impact on your business as a result of all this happening?
Well, we should be fed up with it, because the Fed is basically, when it prints dollars, all it does, it reaches into the future. It takes stuff that belongs to our kids and grandkids, and it gives it to the people today, right? It bails out the banks, it bails out the Boeings of the world, right? It provides liquidity to all these companies that either are struggling or are going out of business. And what we're doing is effectively basically keeping the bubble from bursting, right? So the pin already burst the bubble. The coronavirus pin burst the bubble. There's deflationary pressure on the bubble, meaning there's about $100 trillion worldwide of debt that needs to collapse on itself, meaning the debt is not sustainable. The companies that took this $100 trillion worth of debt cannot deliver the earnings, cannot deliver the cash flows to pay these debts back, because the debt continues to accumulate interest. It doesn't matter. The debt does not care that Corona just shut down the entire United States or shut down most of Europe, right? The debt continues to accumulate interest, and somebody has to pay that interest, and the Fed jumps in and says, wait, don't deflate, don't blow up. Here is free money that you can use for anything. You have a mortgage? Good. Here, pay the mortgage. You have a loan from the bank? Here, pay the loan. No worries. But all we're doing is writing IOUs that we will have to pay in the future, right? All of these things will be paid by us or by our children through taxes, one way or another. So we are putting more and more burden on our backs, and sooner or later we won't be able to carry it, right? So either the currency is going to deflate or the debt has to deflate, but something has to give. Yeah. So I think, again, the non-correlated assets, the gold, the Bitcoin, the things that are not connected to this dollar-based economy are going to compensate for that. And that's why people have to hold 5, 10, 20% of their assets in these non-correlated assets to make sure that when the bubble deflates or when the currency loses all of its value, they will not be stuck holding those assets.
Right. And do you think, a lot of governments around the world and central banks are currently looking to build CBDCs, moving the paper money to a digital format. Do you think that could potentially help solve this, this big problem that we seem to be in, where constant printing and bailouts and it seems like a never-ending cycle, and it keeps getting bigger and bigger. Do you think CBDCs could solve that in one day?
So look, Mnuchin, for example, wants to give every American a few $1,000s so they can continue buying food and pay for the house that they have and so on, which is a good thing. And doing it through a blockchain is definitely better than mailing everybody checks from the IRS, which are going to show up in who knows when, and then waiting for your bank to clear them after 7 days, right? Or you're paying a lot of money to a cash checking facility to basically give you that cash up front. So we definitely have to move to digital money. The problem is moving to digital money does not create scarcity of money. So the reason Bitcoin and gold are going up is because they're scarce, right? You cannot just go and mine twice as much gold or suddenly come up with bullion out of thin air. And same thing with Bitcoin, right? We know exactly how much Bitcoins are going to be. We know how much is being created every week or every hour with a mining operation, but no government or no institution can go and say, hey, I'm printing another 20 million Bitcoin. So moving to a digital dollar still does not solve the problem that we talked about before, where we are effectively doubling or quadrupling or 10xing the number of dollars in circulation. And when you create all these new dollars, you devalue the value of each dollar, right? Sooner or later, inflation is going to take over, or hyperinflation. And so we're going to go first through a deflationary cycle where the debt is going to collapse, and then all this new money is going to create hyperinflation. And every empire in history, every empire, the Roman Empire, the Ottoman Empire, the British Empire, you name an empire, I'll show you how it went bust because it debased its own currency. And it did that because they had too much debt. So we are going through the same cycle. We're going to look just like Japan. We're going to look just like Europe with negative rates. And sooner or later, all that money is going to have to give. And again, it's not a good ending. That's what I'm worried about, is that none of these things end well. And right now, we're going through this crisis, and we're not doing the right things to make sure that we come out of this stronger, versus we are kind of trying to save as much as possible, which is not the solution to have a strong economy.
Right. So I think my last question, to end maybe on a little bit of a more positive note, but how are you surviving quarantine life? Any tips? And I know you're in New York City and streets are empty, but any tips on your end?
Yeah, look, I decided to stay in the city. I love the city. I've been here for the last 30-something years, and New York is my home. The city is empty. I've never seen the streets this empty. All the shops are closed. Even the Starbucks closed. The only store that's open is a liquor store, So, and I don't drink, so I that's not a place for me. But I think we are a resilient people. We're going to get through this. We're going to have some casualties, and that's what we have to do. All of us have to care for the sick, care for the poor, try to help as many people as possible, especially during times like these. And listen to what the professionals are telling you, right? The reason everybody's asking as many people as possible to stay home and keep your distance from others is because that's how we slow down the disease. Slowing it down means we're going to give our hospitals and our physicians and everybody else and our factories time to create all the stuff we need to create, or handle all the stuff that we can handle, to have as few casualties as possible. And that's very, very important. So help not spread the disease, and help us conserve this way of life that we have, and stay safe.
Agreed. Alex, always great and insightful information. Thank you so much. And everyone, if you want to learn more about Celsius Network's offerings, I'll put a link in the description. And everyone stay healthy and safe.